Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the economy in China because the data for May has now been made available and it shows that China's industrial profits fell by 9.1% year on year in May, which was the biggest fall that's been seen since October 2024. And this is obviously a major concern. I've been talking about the fact that lots of Chinese businesses are currently unprofitable. And as the tariffs start to kick in and make it more difficult to export to the USA, this is now causing more companies to lose profitability and fall into a loss-making situation. If we have a look at this chart, which was provided by the Chinese authorities, this isn't something that I've created. It shows the position dating back to 2020, so over the last 5 years. And the scale on the left-hand side of this chart goes from minus 40 at the bottom to plus 100 at the top. And what you can see is the latest data, which shows that year on year, industrial profits are down by 9.1%. But what I really wanted to highlight is the problems that China have been encountering for the last 3 years. This isn't something that's just happened as a one-off blip in May. You can see that the zero line here, which is across the bottom, since the start of 2022, China have actually been seeing year-on-year falls in the majority of months. 2022 obviously was affected by the COVID-19 pandemic, so a lot of companies around the globe were badly affected. You can see that profits fell into negative territory for the first time since 2020 at that time. There was a slight recovery when everything started to reopen in 2022. However, it soon fell back into negative territory. And interestingly, it took until the second half of 2023 to start to see a year-on-year improvement in profitability. And then we had a period where industrial profits were rising, so it was above the zero line. However, you always have to take into account the fact when you're looking at year-on-year figures of what happened in the previous year. And so in 2022 and at the start of 2023, there were these huge negative falls. And so year on year, it's easier to show growth against last year's fall. But as you can see, in 2024, after we had this initial uplift, we then saw year-on-year growth starting to come back down below the zero line again. And towards the end of 2024, it started to tank. And in September, year-on-year, industrial profits were down by 27%. That is a massive fall, a 27% fall. If you think that the Chinese economy is targeting 5% year-on-year growth in GDP, obviously, when you've got a 27% fall in profitability, then it's going to be difficult to actually achieve those figures. And if we look at what's happened in 2025, there was a slight recovery at the beginning of the year, and we saw some growth in industrial profits. However, as we've discussed, in May, they are now down year on year by 9.1%. And of course, the concern in China is that Donald Trump's tariffs haven't really kicked in fully yet, because when you're looking at a 12-month period, obviously that carries the last 12 months. So as we roll forward and more of the months affected by Donald Trump's increased tariffs on China come into effect, then it's going to hurt more companies in China. We're going to see a continued fall in profitability, because even though the tariffs have now been reined back from this 145% level that was initially quoted, they're still somewhere in the region of 30 or 40% or 50% more than they were before Donald Trump took over. So that's clearly going to hurt the volume of sales, the level of revenue, and the amount of profit that Chinese companies are making. And if we have a look at what's happened year to date from January to May 2025, this publication is the official National Bureau of Statistics website from China. So again, not my figures. And it shows that industrial profits in the first 5 months of this year are down by 1.1%. So we saw the 9.1% fall from the last 12 months to May, but in the 5 months to May 25, they're down by 1.1%. So again, the trend here is not good from China's perspective. And if we have a look at this table, it shows the breakdown by sector as to how that 1.1% has been arrived upon. So the top line here is the total, that's the aggregate position. But interestingly, mining is down by 29%. And the reason why I think that's really interesting is because mining is mining for raw materials. So this is things that China will be using in its manufacturing processes. So it might be a variety of different things. So it might be coal, might be steel, might be anything that you need to use a raw ore or mineral for. So the fact that that's down by 29% tells us that China, when it's planning, because when you're taking things out of the ground, you need to know how much demand there is going to be for all of those products over the next 3 to 6 to 9 to 12 months, because it takes time to take that raw material you've taken out of the ground and make it into the finished article to be used in the manufacturing process. And so a 29% fall tells us that looking forward, the mining industry is expecting a reduction in demand because it's scaling back its activities on the basis that Chinese companies that are their purchasers, their customers, are also scaling back. So a 29% fall is a bit concerning, because if that's an indication of what's to come, then clearly 9.1% year to date to May could get a lot worse through the rest of this year. Now, manufacturing is up by 5.4%. And we'll come on to talk about that in a moment, because basically manufacturing is bailing out what's happening in all of the other sectors here. We've got an increase of 3.7% in electricity, heat, gas, and water production. And that's interesting as well, because normally you would expect that to go hand in hand with an increase in output, where companies are needing more electricity and heating to meet all of their demands. But that's not happening from what we're seeing in terms of industrial profits. Or what it tells us is that the companies are continuing to make as many things as they were historically. They're just not making any profit on it. So they're selling goods at a lower price. And if you've been following the channel, you'll know that China is currently suffering from deflation. Prices year on year are going down. So companies having to sell their products for less today than they were this time last year. And as costs are going up, that means that profits are going down. And that's exactly what we're seeing. Now, interesting, if we have a look at some of these other businesses, state-owned holding enterprises. So basically, these are companies that are owned by the Chinese state. Their year-on-year profits are down by 7.4%. So that's materially more than the 1.1% that we're seeing for the 5-month in aggregate. And I think it's interesting because those state-owned enterprises, obviously, they're supported by the state. So they don't need to make profit, or if they make a loss, the government just gives them the money for it. So the fact that those enterprises are down by 7.4% again is worrying, because it's pulling the weighted average down. And foreign invested enterprises, joint stock enterprises are down by 1.5%. Again, concerning for the state in Russia, because they're going to have to pick up that difference. And foreign-owned enterprises and enterprises invested by Hong Kong, Macau, and Taiwan, they're up by 0.3%. So year-to-date, 0.3% for the first 5 months is miles away from the 5% growth that China is targeting for 2025. And then private enterprises, which has been split out, is up by 3.4%. So still less than that 5% target that the authorities are shooting for. And I thought I'd share this graph, which, if you don't speak Mandarin, which I don't, so I can't give you a full description of what all the Mandarin on the top and the bottom of this chart says. But basically what this is a plotting of the year-to-date growth figure in profitability over the past year. So we know that in the first 5 months, it's fallen by 1.1%. And on a rolling basis, what you can see here is that there was an improvement. That's the figure for May. There was an improvement in the previous 3 months. So February, March, and April, we saw an improvement. But between in the previous 6 months, you can see that all of the growth was in negative territory. So we're seeing a long-term trend here. When you take a step back and look at what's happening with this chart, the blue line, which shows that rolling forecast, it's actually been in negative territory for the majority of the last 12 months. And this tells us that Chinese companies are struggling to make a profit at the moment. And clearly, if you're not making profits in the long term, making losses, then somebody has to fund those losses, or you become illiquid, bankrupt, and have to close the company down. And this chart, which has also been provided by the authorities in China, shows the year-to-date GDP growth figures. And they're going for a 5% target for 2025. And you can see that so far in 2025, they've been below that target. In January, it was 4.53%, and it's increased to 4.97%. But the big question is, are these companies making any profits? It's one thing saying, well, GDP is growing by 5%, but if that's at the expense of profits, then it means that somebody's going to have to fund those losses, and that's not sustainable in the long term. Now, the Chinese authorities also provide some analysis of what's going on, and this comes from the official paper that was published alongside this data. And it says multiple factors have led to a decline in profits of the industrial enterprises between January and May. Industrial enterprises above designated size, so the bigger ones, realized a total profit of 2.7 trillion yuan, an increase of 603 billion from January to April. But due to multiple factors, such as insufficient effective demand, falling industrial product prices, and short-term fluctuations, profits fell by 1.1% year on year. From the perspective of profit composition, short-term factors such as investment income had a high base in the same period last year, which pulled down the profit growth rate of industrial enterprises above designated size between January and May. So what that's saying is that basically there was falling demand, and falling prices has led to the loss of profits. Well, that tells us that there are major problems, because if you're producing things, if you're a manufacturing entity, you need demand to at least stay constant, ideally to go up. When you've got falling demand for your products, that tells you that there's a problem with your long-term growth, because if that fall continues, you're not going to sell as much, you're not going to make any profit. And falling prices is making it worse. It's a double whammy. You've got a fall in demand, but also the products that you are selling are at a lower price this year than they were last year. And that's exactly what's happening in China. This is a really concerning situation for Chinese businesses, because you can't control demand or prices. Prices are basically where the market is setting them, and demand is what's happening as a result of those prices. And when you've got the two of them falling hand in hand, that's bad news, because what it will mean is that certain companies will think, well, we need to cut our prices further to beat the competition. And then you can get a race to the bottom where everybody's cutting their prices, demand keeps falling, and profits get completely wiped out. And that's effectively what's happening in China right now. And if we have a look at this part of the analysis provided by the Chinese authorities, it says the ballast stone role of the equipment manufacturing industry has become prominent. What that means is, as we discussed before, the manufacturing industries in China are now holding up the rest of the economy. We're seeing huge falls, 29% in mining, that are being partially offset by continued growth in some manufacturing sectors. This says the transformation and upgrading of the industrial economy has continued to advance, and the efficiency of the equipment manufacturing industry has remained at a high level. From January to May, the profits of the equipment manufacturing industry increased by 7.2% year on year, driving the profits of all industrial enterprises above designated size to increase by 2.4%, and playing a prominent supporting role in the profits of industrial enterprises above designated size. From the perspective of industry, among the 8 industries in the equipment manufacturing industry, 7 achieved profit growth, among which the profits of electronics, electrical machinery, general equipment, and other industries increased by more than double digits, with growth rates of 11.9, 11.6, and 10.6%, respectively. So what that tells us is that there is a small number of companies that are basically pulling all of the weight. They're making the profit and offsetting all of these loss-making enterprises. But the problem that China is going to face is that the ones that have been highlighted, electronics, electrical machinery, and other general equipment, a lot of those industries are exporting to the USA. And with the new tariffs that are now coming, there is likely going to be a lot more competition. The price of those products is going to go up, and therefore US consumers are likely to start deciding whether they want to keep buying those products or go elsewhere. Also, Donald Trump is encouraging US enterprises not to buy from China. So Apple's a good example. They've been told that any phones that are imported from China will face a 25% tariff. And so Apple is now trying to make sure that all of the phones that go into the US market come from other places, such as India. So those initiatives are going to damage the amount of trade and profitability that these Chinese businesses are making. And that's a problem because if these enterprises don't continue holding up all of the other parts of the economy, we could see the economy really starting to come off quite rapidly. So, what's the summary and conclusion today? Well, I wanted to post this video because I think what's going on with profits in China is really critical to the long term success of the economy. It's one thing talking about GDP and just looking at big picture terms as to what's happening. Is China going to make its 5% GDP target for 2025? That's a question that we've asked a number of times. And I think it's easy to just get carried away and think, oh, well, if it's met its GDP, everything's fine. But you always have to look into the detail as to what's going on with all of the companies. And what we are seeing over the last 12 months is that there's been a significant fall in profitability in China. And profitability is absolutely key to the long-term success of a business. There is no point setting up a business and having lots of sales and making lots of revenue and saying, oh, I'm growing 5% year on year in revenue terms. That's fantastic news. If you're not making a profit, because at some point you're going to run out of money, because profitability is key to cash flow and keeping your company going. If you're making sales, but you don't make any profit, then somebody has to pick up the bill for that loss. And as we saw in the data earlier, a lot of the government enterprises in China are now making losses. They're down year to date by around 7%. So what that means is that the Chinese state is going to have to fund those losses. So that will come out of the Chinese wealth fund, essentially. And if we start to see less and less companies making a profit, then we'll see the government having to bail out some of these companies. And if they're privately owned, then there will come a point where you say, is this company viable? Can we continue? Does it have enough cash? Who's going to keep putting money in to fund all of these losses? And the problem that China has is that in its home market, we've got falling demand and we've also got falling prices. So China is now into deflation. And what that means is that companies have to sell their products for less today than they were this time last year. As their costs have been going up, that means that their profit margins are being squeezed. And that's exactly what we've seen in today's video. In the last 12 months, industrial profits are down by 9.1%. So that means that all of those companies that have made a loss will have to find the money from somewhere. So they'll either have to ask their shareholders or ask their bank to give them more money. So that's going to increase the amount of debt in the Chinese economy. And the problem that you have if you're funding your losses with debt is that that doesn't solve the problem. If the problem is being driven by demand and falling prices, you can't really do much about that. You can increase your prices if you like, but what that will mean is you'll probably lose even more sales, because if all your competition are reducing their prices and you're increasing yours, then consumers are likely to buy your competitors' products, not buy yours, and the situation will actually get worse. Your losses will increase. So there's some real problems going on in China right now, but there's also more problems ahead because Donald Trump's tariffs are taking effect. They're now starting to hurt the exports into the USA, and that's the biggest single market for China. So Chinese companies are being hit from all sides at the moment. Profits are going down, losses are rising, and this represents seriously bad news for China because somebody's got to fund those losses. And most likely, that's going to be the Chinese state, which is then going to have to find more money to keep these businesses going. But there is a question mark as to whether or not these companies will remain viable if they continue banking losses. So hopefully you've enjoyed today's video, you found it useful, informative and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and thank you so much to everyone that's supporting me. I recently had somebody buy me a YouTube super thanks for $200. That was absolutely insane. So I'd like to say a special thank you to that viewer. Thank you so much. Really, really appreciate that. I also appreciate the fact that somebody bought me a lot of coffees recently. Thank you so much. Really, really generous of you. But also thanks to all my patrons, YouTube members, and Buy Me a Coffee members. Thank you, everybody that supported me. Really helps to keep me going. And here's something to put a smile on your face.
Double